Another corporate conversation now. South Indian Bank is in focus on the bank of earnings. Numbers sequentially were weak in the first quarter. Both interest income and margins were under pressure. Provisions saw a sharp rise on a quarter-on-quarter basis. Let's get a better sense of this quarter and whether things are going to be on the mend. Murali Ramakrishnan is Managing Director and Chief Executive Officer at South Indian Bank. He's joining us right now to take those questions. Mr. Ramakrishnan, good morning. Good to have you with us here. Thanks very much for your time. Prashant this side. Could you start with why the operational performance was weak in this particular quarter? What happened?
No, if you compare Q4 to Q1, generally Q1 is the generally weak quarter for us, as we see even the last 2 years. So if you look at if you compare quarter 4 to quarter 1, they will always see some kind of a dip. But if you compare Q1 to Q1, we have shown a substantial jump in all the parameters. But just to come specifically to the issue which you are talking about, in Q4, even if you look at net interest income, we had a huge recovery in Q4. And when you recover from NPA accounts, there is the way we are accounting that is there is a little bit of an interest reversal which we do, whichever we were sacrificing when we were writing NPA. That we adjust it first towards the recovery, and then the balance basically goes towards GNPA. So if you look at for Q4 specifically, what we had was, since we had a very bumper recovery in Q4, the reversal due to that NPA recovery was 101 crores for Q4. That number was 47 crores for Q1. So if you actually look at net of that, our NII actually has increased from 756 crores to 761 crores. So this quarter, without any big recovery or collection, I think on fundamentally operational basis, we seem to have done. I mean, we have done quite well this quarter, shown by net interest income going up even compared to Q4.
So on that point about net interest margins, sir, your NIMs have contracted on a quarter-on-quarter basis and by more than 30 basis points, 3.34 versus 3.67% Q on Q. Do you foresee a more NIM contraction from the current levels of Q1? Any guidance for the full year?
So this is again in relation to the answer which I gave for the first question. When you have a huge recovery from NPA account, when we actually set off against the interest sacrifice which we do, you attribute that to the NII increase. But if you look at, of course, apart from the reason that this is actually given a one-off increase in Q4, if you look at the liquidity situation in the market, you know that banks have been continuously raising their deposit costs, and we have also been repricing our deposit. But we were very carefully repricing our deposit, and we started doing that towards the end of Q3 last year, and Q4, Q1, we have seen a little bit of repricing impacting us. Of course, to a large extent, we were able to pass it on to the customers. And net, if you look at for the full year last year, we had ended the year with 3.3 NIM, which is currently at 3.34. So if you look at the bank as a whole, we have increased our NIM by 4 basis points. But if you look at specifically for Q4 to Q1, yes, there is a dip, but this phenomena will keep happening because depending on the big recovery which you do in any particular quarter.
Okay, so could you tell us overall for the coming few quarters, do you expect it to remain around this level, around 3.5%?
Yeah, we are actually looking at taking it towards 3.5% by the end of the year. This is the guidance I've given earlier too. So we are well on our track to do that. So currently we are at about 3.34. I'm sure we will endeavor to reach 3.5 by the end of the year.
Sir, on we'll get to asset quality in a bit, but on the advances growth, I think that's coming at about 14.3% or so. It's dropped off. Last year, we saw 16.5% growth. For the full year this year, what would those numbers look like?
I've been giving guidance of 2 times the growth of GDP. This is what I've been articulating. So we expect GDP growth to be around 6.5%. So we are actually looking at 13% kind of growth for the full year. And actually, we have done well compared to the guidance which I've been giving. And as a bank, we really want to be focusing on quality. And the new book which we have built over the last 3 years, we have added close to 46,000 crores of new book where the NPA is only 0.15%. So we'll continue to be very careful in what we are wanting to grow. We just don't want to show growth for the sake of growth. We would really be careful in adding counterparties to our portfolio so that our new provisioning towards any new book will have to be far lower than what I inherited as a legacy book.
So you said recoveries weren't big in Q1. Do you foresee recoveries collections picking up in the subsequent quarters? Any numbers on that? And what would your gross NPAs stand at by the end of the year? How do you see that trend?
Collection and recovery for the last full year, we did about 1,800 odd crores. And this year also, we are expecting recovery and collection to be around the same level, 1,800 crores. Slippage in the first quarter, as I said earlier, it's a little bit on the higher side. This is what we've seen in Q1 of last year also, in Q1 of the prior year also. We continue to maintain our guidance of 1,500 crores for the full year. And we are pretty confident of curtailing it within that. So net recovery would be 1,800 crores and slippages will be within 1,500 crores. GNPA, as we talk, we are at about 5.13%. The endeavor is to reach closer to 4.5% by the end of the year. Net NPA, which is currently at about 1.86%, we endeavor to reach closer to 1.1 to 1.2% by the end of the year.
No, got that. And credit costs for the full year, what would they be? They've moved up from FY23. In the first quarter, I think it's about 1.5%. What would they be for the full year?
Credit costs, we continue to maintain at about 1 point. Last full year, we ended with 2.1% for the full year. This year, we expect it to be around 1.8 to 1.9%.
Okay, got it. Just one more question. Could you tell us about the name of candidates which have been sent to the RBI for the post of MD and CEO, sir?
So I can't reveal the names. So we have sent 2 names to RBI. So we're expecting clearance from RBI soon. Once it comes, certainly we'll be sharing that with you.
Okay. By when should we expect it? I mean, when are you expecting it rather?
Yeah, we are expecting it sometime in the middle of August.
Sometime in the middle of August. Got it. Thank you very much for joining us, sir. Appreciate you taking out the time and answering all those questions for us.